And we are officially live, broadcasting only on onedealaway.com/live. This is Money Matters. My name is Nev, and today is Friday. Can you believe it? It's end of the week. How did that happen? And not only is the end of the week, but we've gone through almost half of November. Crazy stuff. Crazy stuff. In today's episode, we have some amazing stuff going on. Today we are broadcasting only on onedealaway.com. Yesterday we have attempted and successfully, may I add, broadcasted both on onedealaway.com and Facebook. We've gone live there as well. And of course, we're going to continue doing that on Thursdays because this goes directly to the Facebook group that focuses on real estate. And on Thursdays, we do real estate review of what's going on, what's happening. And so we're going to continue doing that. We seem to have some success with that component, so we'll keep on doing that. Hopefully, I won't kill my computer because if I do, well, all of this goes away until Nev gets a new computer. And I really like this one, so I don't know that I want to get a new one, but I guess it happens with the technology. Now, let's chat about what is today. Well, aside from Friday, right? We have some very important news that we're going to be discussing. So we're going to be talking about Deutsche Bank and the fact that they want to tax. They're proposing taxing individuals working from home. So we'll read more about it, and I want to see how you feel about the whole thing. We're going to be talking about the Fed Chairman Powell and what he's talking about with the economy at the global scale and kind of what his fears are, which I think they very much align with my fears, or my fears align with his. I don't know how it goes, but they're definitely aligned. We're going to be discussing some of the closures that have been happening, that I have been announcing that are going to come to US, and of course they're starting to come up. We're going to look at what's happening with the virus itself and kind of where we are with the whole spectrum. Ray Dalio had a lot to say about Bitcoin, and of course we're going to be discussing a bit of that, but it goes in a contrast to my belief and as well a belief of Paul Tudor Jones, as well as Druckenmiller. That's right, he is the newest mega billionaire coming into the space to play. We're going to be discussing about PayPal and how basically everybody can jump in and play within the crypto space, the good, the bad, and the ugly. And of course, we're going to do a little bit of the technical kind of review. Where are we with Bitcoin right now and what is happening in the marketplace? So there you go. This is what the discussion is going to be for today. I hope that you're excited about it. I do want to welcome everybody watching this live on onedealaway.com/live. Sign in, say hello. If you don't have an account, create one. It's free, and it comes with the free, absolutely free course, Crypto 101, where we go over what it is, how to use it, how it works, what the wallets are, what the different blockchains are, a little bit of technical, a little bit of fundamental analysis. I mean, it's a full-blown course that I think is going to full-blown your mind. If you're watching this elsewhere, maybe YouTube or listening on any of the podcasts, I also want to welcome you and thank you so much for joining me. If there's something like a subscribe button, do me a huge favor and do subscribe. If there is a notification button, do hit the notification as well. And let's do this. All right, y'all. See, that was lovely. All right, let's get down to business. Let's take a look at the market, crypto market. I have to be very specific what market I'm talking about and see what's going on. So no time to waste. Here we go. Bitcoin is well over $16,000. It broke over 16,000 yesterday, and it's been holding pretty steadily above it. However, there is a potential it could go down, and we're going to be taking a look at some of the technical stuff within the charts to see could it go down, where it's going to go, how far down it could go or not potentially. But as you can see over the past 24 hours, it's been pumping 2.9%, up 4.1% over the course of 7 days. Ethereum is holding very strongly now, well above 400. It's been going up over the past 24 hours, 1.1%. and 7 days is 11.5%. The rest of the market, as we kind of scroll down the top 100, predominantly in the green, especially when we look at the 7 day. And look at this thing. Ave is absolutely killing it, 10.1% over the 24 hours, 99% return in the last 7 days. Let's take a look at the top performers of the market. And Vitae, VITAE, is up 21.9% 24 hours, 48.1% 7 days. DCR 17.2% up. Sushi is back in the game at 10.7% increase. Ave 10.1, Uni 9% exactly, STX 8.4, and then it kind of goes down from there. In the sort of dumping side of things, the biggest one is negative 6.2 for Ampleforth, which also has been dumping over the past 7 days at 11.7%. Then we get down into like the threes, the twos, and the zeros, so really not much on the losing side of things. Now, when we look at the 7 days, Wi-Fi, YFI, has been performing incredibly insane, pumping 103.5%, standing now at $17,403.05. Thank you very much. In the second place, we have Ave at 99%, STX 74%, LRC 52.8%, Rune 50.5%, Uni 48.3%, Sushi 48.1%. And as you can see, there's a lot of winners in that sector. And then on the dumping side, Ampleforth again is at the top at 11.7% down. CRO down 11.2%. XMR, which is the Monero, is down 5.1%. And I think things like Monero are going to honestly sort of slowly but surely start losing, because the security tokens and stuff are starting to be delisted from many exchanges just because of the lot of risk that they pose. So do your own thing, do your own due diligence, as they say. And now we're going to go into the news of what's going on. So we're going to get started with the Deutsche Bank. What in the world are they saying? Well, they have done a little bit of digging, and they're recommending 5% work from home tax after the pandemic. So not like right now this second, but who knows, somebody might get excited sooner rather than later. We've seen that before. We're probably going to see it again. Deutsche Bank researchers argue that people working from home enjoy economic privileges that do not extend to those forced to work in person. Additionally, they contribute less to the infrastructure of the economy while still receiving all of the benefits. And now they're saying, well, they don't make as many purchases and they should contribute to the economy in some other way. Excuse me. So we talked about this, I want to say back in March, maybe April, when I was, sort of lacklustery kind of doing the shows and stuff. It wasn't on a daily basis, but I was saying, the economy is going to suffer in a big way because, you don't drive to work, so that means less gas, right? You don't stop to the coffee shop on the way to work and to grab your breakfast and coffee, right? You don't stop for drinks after work. Not that you could now either, because, we'll talk about some of the shutdowns that are kind of happening. And so all of those pieces kind of combine, and they're saying, wait a minute, people are not spending as much money, we should tax them. So that's kind of what Deutsche Bank is doing. Now, work from home tax would be paid by workers, not employers, unless their employers provided them with a permanent desk, meaning they are saying you have to work remotely. That is the only option that we work. Self-employed and low-income remote workers would be exempt. Researchers said that $48 billion would be generated from such a tax. Now, you let me know how you feel about the whole thing. I think it's quite bogus and ridiculous. But then again, what the hey do I know? I am not a large bank looking to figure out how do we squeeze even more money out of people. Will it happen? Will it not happen? Who the hey knows? But it is something that they have published. And, there's going to be an overzealous government, somewhere that is going to say, that's a really good idea. We should probably do that. Now, speaking of the government and central banks, because they're, one in the same, that's at least my personal opinion. Jerome Powell basically came out Thursday, meaning yesterday, and said that he's worried about women, children, business owners who are facing long-term consequences. And I would argue that this kind of expands to many many people out there. So, quote, the risk that there is some longer term damage to the productive capacity of the economy and to people's lives who have been disrupted by the pandemic. It's women who are not by choice out of the labor market, and the kids who are not getting the education they should be getting. Small businesses with generations of intellectual capital that is being destroyed, and workers that have been out of work for a long period of time and losing their connection to the labor force, and losing the life that once had. October was far better than Wall Street expectations when it came to employment component, and some 12 million workers have returned to their jobs following 22 million layoffs in March and April. However, we are still getting folks that are getting, laid off, so to speak, or furloughed and stuff. And I fear, personally, that as we enter the lockdowns 2.0, which we've seen in Europe, and I've been saying for a few months, Europe is only a few weeks ahead of us on everything when it comes to this stuff. So what happens there, we can expect to see here, and now we're starting to see it happen in US, and we're going to talk about that in just a moment, so stay tuned for sure. However, some economists worry that a slowdown could come. Well, duh, it is going to come because they're going to shut it down. If they shut it down, well, the slowdown is definitely coming. And even though there's still some disputes back and forth with who the president should be come 2021, is it Biden, is it Trump, are there lawsuits and all of that stuff, I'm not even going to get involved into the political game because it's too complex. And Biden is basically very seriously getting ready, and individuals that he's appointing to kind of be part of his advisory cabinet committee, however you want to call it, are basically saying that we should look to 4 to 6 week lockdown as preventative measures. Well, those 4 to 6 weeks are not happening now in November or December. Remember, if this whole thing truly ends up happening and he truly ends up being sworn in as the next president, that doesn't happen until end of January. So if we're looking 4 to 6 weeks, then we're looking at February and March. So here we go again. I know many of us have been looking forward to 2021 thinking, it's over and done with and we can relax, but it doesn't seem like that is coming. We are not going back to the same economy, Powell said. We're recovering, but to a different economy, and it will be one that is more leveraged to technology. And I agree, and of course, technology has been raging quite a bit with automation and that kind of stuff, and I think is definitely speeding up, and I think other people agree to that as well. An increasing trend to automation and work from home positions are adding to the challenges, meaning policymakers will have to be much more accommodative. More policy will be needed from both the Fed and the Congress. You'll see more telework, probably acceleration of automation. All that is was in the process of happening, but you're going to see much more of it, and might I add, much faster pace. After the unemployment rate goes down and there is a vaccine, there's going to be probably a substantial group of workers who are going to need support as they find their way in the new economic whatever it looks like, right? Because it's going to look very different. Now, Pfizer, as I'm sure you have all heard, has announced this week a successful COVID-19 vaccine is certainly good and welcome news, and everybody's excited. I mean, we've seen the stocks kind of do crazy things where the technology stocks dumped, Carnival Cruises and that kind of stuff pumped, and we've discussed that, I want to say 2 days ago, Wednesday maybe, and if you're interested to hear about it, you probably can find it. If you're listening to this through a podcast, you can probably find it in one of the previous episodes released a couple of days ago. Or you can also go to the YouTube channel, Money Matters with Nev K, and be able to find it right over there under the money section. So, but he's basically saying it's too soon to assess with any confidence of the implication, kind of how things are going to roll out. So that's kind of where we stand right now when we look at the economy, right? So it's not looking pretty, which we already know. Nobody needed to tell us that. And of course, they are urging, he's very much urging for this additional fiscal stimulus help. I know that Biden has been discussing about some of the potential stimulus to kind of come our way. We'll see how that goes because again, it's not really up to him. You have to have entire government, and right now they're kind of going back and forth. Still can't agree. They couldn't agree since March, basically. And I've been saying this, calling it all summer, all fall. So the earliest we could potentially see something would be next year. I don't see it happening this year at all. And maybe it will happen next year, but it might be a bit too late by the time it happens. Now, I do want to go in and talk about sort of what's going on with the virus and stuff and kind of where we are with the whole thing because, even though this is not necessarily health channel or anything like that, it does have implications on the economy, on our money, on the employment, on our investments, on our businesses, and everything else. So, this article is coming from Zero Hedge, talking about that we are seeing a huge uptick in cases, and this chart right over here that you're looking at, and for those of you that can't see it but are listening, I mean you can see that we're seeing the daily new cases are definitely going through the roof and parabolic increase on up. The good news is that back in March and April, while the daily new cases was on the rise, the daily new deaths was way up high. Now what we're seeing is that the daily new cases are definitely picking up at a much higher and faster speed than the daily new deaths. However, if you also look at what happened in this July to August section, is that we've seen the daily new cases rise and then the deaths kind of lagged behind. So is it possible that we're going to see that yet again? I don't know. I'm not a medical professional. I don't plan on becoming one, but it is possible when you just kind of look at the charts. Now, here we go. This was again released yesterday in the news, so we're covering it today. New Jersey is seeing the virus come soaring or roaring back. Positivity rate in the state has soared to 12%. Now, neighboring state, Pennsylvania, by comparison, is 18.3%, which is much higher, but New York, by contrast, is much lower. However, New York is worried because they're so close that the virus is going to jump over Hudson and start spreading over there, which is, very, very possible. So, a bunch of tweets out there happening about this whole thing. I'm sure you've been following it and paying attention to it way more. Now, here's what's happening in city of Chicago. They just issued an advisory asking residents to call off Thanksgiving. They're saying, go for, go to work, go to school, but kind of that's about it. Call off Thanksgiving gatherings and stay in place for 30 days. This advisory takes effect on Monday. So after this weekend, it's going to take effect. France's lockdown, it basically, light measures would stay in place for at least another 2 weeks. And they're saying that the French ICU occupancy, one of the mostly closely followed and watched indicators in Europe, has risen again to 96.6%. Germany raised the possibility of extending the country's COVID-19 restrictions through the Christmas. CDC has released new guidance reminding Americans that the mask wearing offers protection benefit to the wearer as opposed to, well, everybody else. So it used to be masks on, masks off. Actually, it was masks off, then masks on. Then it was about others. Now it's about self. So I know it's constantly evolving and stuff, but more and more businesses we're seeing saying, no, you got to have a mask. I don't care about health conditions or anything like that. You will have a mask, period, end of discussion. And I am definitely here where I am living, which is in Rhode Island, definitely seeing that much more and increasing and picking up yet again all over the place. Right here, we have basically been, we have a curfew. That's right. And don't ask me when the curfew is. I want to say it starts at like 10 o'clock or 11 o'clock at night and it runs till about 5 a.m. So that's kind of where we are right now. And the governor has kind of issued warnings of like, stop it, you got to behave or I'm shutting you down. So it is very likely that she will shut us down. It is going to happen, and we're seeing that happen all over the place. Let's continue with the article to kind of see this is happening all over the globe. Detroit schools are about to halt face-to-face learning, and Detroit public schools are halting in-person learning through January 11. Nearby Michigan have districts have reverted to online learning already. Australia has become the latest EU member to report a newly daily record high. UK, on the good side, is starting to indicate that the spread is starting to slow down, which is good news in this sea of bad. Belgium, Netherlands, and Czech Republic have also seen significant declines in infection rates. And this thing is very cool right over here, this chart, because look at this thing. It's basically all of the countries that are well, every country is experiencing this to a degree, but they are basically charting of kind of what's going on. And you will see this top thing, that's United States, right, topping the charts all over the place. And I'm thinking, man, I might be in the wrong place. What are some of the things down here, Gabon or New Zealand or Niger or something like that? Maybe that's where I need to move, because I'm kind of liking that they have less of the stuff. In the US, the national records north of 60,000 have been reached. Governors from New York to California have imposed new restrictions on businesses, social gatherings, and movements this week. And I think we are going to start seeing that happen quite a bit. Now, this chart right over here talks about the number of COVID 19 patients in hospital. And again, looking at the chart, you can see all of the European countries that we've just talked about: France, Italy, United Kingdom, all of that stuff. And the United States beats them all by what, 10x? Okay, not 10x, but definitely by 100%, well over 100%. Now, some of the restrictions that are coming in include closing bars, restaurants, or limited seating service inside and the capacity, closing non-essential shops and businesses, barring alcohol sales after 10 o'clock at night. So we're seeing all of that stuff kind of happening, and it's definitely coming. Now, interesting piece over here. We've seen, we've heard from. This was quite a few months ago that Russia had their Sputnik 5 that was released as a sort of the vaccine, and Hungary has reportedly agreed to buy its first dose of the medicine or the vaccine, or however you want to call it. Moderna, a company working on a vaccine with the same mRNA technology as Pfizer vaccine, said that it finally has enough data for an interim analysis of the stage experimental trial. Now, the news predictably sent Moderna shares up 5.3% in the pre-market trade. It'll be kind of interesting to see if it sticks. And of course, we also have across the pond that Japan also hit the new record, and there are regions in China that are getting ready for an increase in the whole thing. So as you can see, we're not out of the woods. We're definitely going back into another lockdown, which is going to further hurt the economy, the businesses, the people, the employment, and everything else. So this whatever it was, this whole V-shaped recovery, some people have been calling it a K-shaped recovery, because the rich have definitely gotten way wealthier over the last 6 to 8 months or something like that, making gazillion dollars. Okay, I know that's not the real number, but they have definitely been making way more money than they have in any periods before. And is it going to continue? Maybe not. We'll see how it's all going to work out. Overall, I expect at least on the length of time, shorter term period, pain. Is it possible that when we hit the new lockdown, that the stocks are going to dump again? Yes, it's very possible. Is it possible that the toilet paper is going to be again the highest sort of regarded asset one could hold? Possibly, yes. I think folks are starting to maybe go back out again and try to see if they can have some shelf stable food in case the lockdown truly happens again, just to avoid the whole panic of what has happened in the March. Now, what does that mean? Well, it means that, if you're investing, you definitely want to take, sort of precautionary measures and potentially prepare for it. Not a financial advice, just the way that I'm kind of thinking through the whole thing. Right? What are the other things that we've seen in March, right? So you want to kind of think through that stuff. We've seen stocks, really plummet. Is it possible we're going to see it again? Yes, it's very, very possible we're going to see it again. That also means that if that happens, we've had high correlation between the stocks as well as the gold and Bitcoin, which we're going to talk about in a moment. All of them dumped in a big way. So if that is to happen, you can expect that at least in a short term, we could see everything again go down, find some sort of bottom, and potentially things might decouple. Now, Bitcoin has been decoupling from the stocks for a little while, and so there is a potential that it might not dump or that it could go higher while the stocks dump, right? But we just don't know that, right? There is no historical component to tell us that that will absolutely happen. We've seen some strengths in the last weeks, a couple of months and stuff, where we would see the stock sort of start to slide down, but yet the Bitcoin was holding steady or even going up in price. So we could see that as well. On the real estate side of things, we didn't talk about it yesterday, but I want to mention is that if the lockdown happens, that also means that the sale of the homes is going to basically lock down as well. It's going to come to a screeching halt, which we could then see potentially, I don't know, potentially could see that the prices will stay static, maybe start coming down potentially. Again, I don't know, but it is going to be something to pay attention to. And it's going to be very interesting to see what's going to happen with mortgage rates. We could potentially see, we've seen that they started to kind of hold steady, potentially start to rise because of the 10-year treasury. That's right. And so we could see some of that, but on the other side, we could see that there might be some sort of step in from the government, maybe for another stimulus, maybe, who knows, and the sort of support for the banks and the mortgage lenders to kind of protect them, to see if they can lower it to try to spur it back up. So again, this is, we're not talking this happening, this week, but I am more looking at between now and kind of like February. So we're looking at very, very rough winter months ahead of us. So we'll see how it all goes. I hope I am completely wrong on this one, and that it's going to be basically nothing. Everybody's going to be like nice, warm, cozy, enjoying their holidays. But we'll see. I don't really see that that's kind of how it's going to go. I think we're going to be experiencing some pain. Now, we talked a little bit about Bitcoin, so I want to go in and take a news of what's going on. So you might recognize this gentleman. This is Ray Dalio, and he was recently talking about the problems of the within the Bitcoin and the cryptocurrencies. And he's expecting a more digitized version of the government issued currencies in the future, the CBDCs that I have been calling for a few years, and they are definitely coming. I actually just this morning saw an article that Christine Lagarde was talking about, that the Euro CBDC, she's expecting it to go live within next 2 to 4 years. And I think it might go even faster, but we'll see how that goes. Now, what he's saying is that because of that stuff, that he believes that other cryptocurrencies are not going to work. And, clearly I don't agree with him, so I'm going to put that out there, but you let me know how you feel about the whole thing. So here's the 3 reasons that he says. 1, lack of venues that will accept cryptocurrencies for purchase. Quote, I can't today can't take my Bitcoin yet and buy things easily with it. So to a degree, yes, but not as much, right? So you can't take that to your local grocery store and buy it, right? At the same time, you can't take your gold to the local store and buy stuff, nor can you take your, holdings of Apple or Amazon or anything like that. Like, you can't take your stock share and be like, here, I'll give you one of these for one of that. Like, it doesn't work that way. So I think where I disagree with him is that he is missing the point of Bitcoin, I know originally people thought that Bitcoin was going to be used for exchange. What we're seeing is that it has morphed, and that is not what is happening. People are getting into it, holding on to it for a value, for financial preservation reasons, right? And so that's kind of where people are jumping in on that stuff. So they're not using it to buy stuff, they're using it to hold. Where people are using things to buy stuff are going to be stable coins, or potentially the coins within the particular marketplaces, kind of like points, if you would, where you can exchange them for the services that that particular company or provider or DApp or however you want to call it is providing for folks. Second, he's saying that is a problem. Bitcoin and other cryptos are too volatile to be considered an effective store of wealth. Yes and no. I think that they are volatile, but we've seen that that volatility was super super high years ago, and it's still volatile, but the volatility has started to definitely smooth out and slow down, especially within Bitcoin. And I think as more people kind of jump in on the Bitcoin train, as they are, I'm going to see in a moment that that is happening and has been happening. That is going to smooth things out and is going to become much less volatile. The cool part about volatility right now is that you do have this potential to, get 50x, 100x on what you actually have. And so I think he might be missing some of the points. And he's like talking again, volatility hurts Bitcoin use transactionally because vendors won't know how much they're getting. Again, he's missing a point. It's not being used for transactions, it's being used for a store of wealth. And where we're seeing it being used for transactions, again, piece that he's missing is that we have now card providers, right? Well, they will give you a credit card or a debit card that utilizes your asset, your Bitcoin, where you can actually spend by swiping the credit card. And so that's kind of what we're seeing, this connection of the crypto holdings with the sort of merchant needs and stuff. We have many companies that allow for me to spend Bitcoin and automatically transfer it into dollars or euros or that kind of stuff for the merchant. So you have all of those things, and of course, like I said, you have stable coins which allow for that stuff. And again, the way I kind of think about the whole crypto space, that is not being mentioned in this article over here, and Ray is not talking about it, is that when we think back to credit cards, way back when credit cards started, Diners was the first credit card that was rolled out, and it was it was a diners club, right? And you had to join this club, and at that time everybody was like, these people are crazy, nobody's accepting credit cards, nobody, like, you can't swipe it anywhere, you can't do anything with it. But people were holding on to it. Eventually we had those giant metal machines that would kind of come in, right? And those metal machines would roll in, and there was a carbon paper, and you put the credit card upside down, and you kind of had to go that component back and forth, swiping it, right, so that it imprints. And then they would give you a card back and a copy of the whole thing, and then they had two other copies, then one they would hold on to one, and then mail or walk over to the bank the next day, and then the bank would take it and process it like a check. And so you would spend your credit card bill on a Friday, and it wouldn't hit your account until like Wednesday or Thursday of next week, or sometimes even weeks later on it. Nowadays, you swipe the card, that puppy is gone instantaneously, right? So we've seen technology kind of catch up to the technology that was built, and that's where we are right now with crypto. Same thing with internet. When internet was originally kind of like rolled out from the military onto the regular old mortals like you and I, there was not much use cases for it. It was old, it was clunky, it was slow, it was boring. The websites were just awful. You couldn't do much of anything. Nowadays, look at us. I mean, I am streaming live, right? On a website. I am able to save the videos that you can watch over and over and over again. We're able to have these podcasting service that is free of service, free of charge, right? That comes to you directly. I was actually broadcasting live on multiple channels and stuff. You couldn't have imagined that 10 years ago. Heck, you couldn't have imagined that 5 years ago. Nonetheless, 10 or 20 years ago when this puppy started rolling out. So again, it's just that we're so early in this stage that sometimes it almost baffles me that people are unable to see that this really does grow and develop over time. So again, I disagree with him on the second point as well. The third point that he's making is that if Bitcoin and other cryptos become material, Dalio predicts governments would outlaw it. They will use whatever teeth they have to enforce that. And again, on that one, I could see that happening, right? I could see that happening, that there's going to be some governments that outlaw it. However, However, not every government will. Some governments, in my humble opinion, will actually adopt it as part of their storage of value. Just like they have some dollars, right, in their reserves, and they have some gold in their reserves, I think they're going to have some Bitcoin in their reserves. Starting to see that with wealthy individuals. We're starting to see that now with publicly traded companies. We're starting to see that now happening, all over the place. And, I assure you, governments know about Bitcoin, okay? Central banks know about Bitcoin. And while they could ban it, quote unquote, in a particular country, they can't ban it around the world, right? Because it is digital, it exists on a decentralized platform. It's not like one computer somewhere that they can come in, right? Like government can come in right now, this second, take my possessions, take my computer, lock me up, and that's that, right? But they can't. What are they gonna do? Lock up 7 billion people, right? Like you can't do that. They can lock it down, right? When they have done that, and they're going to do it yet again. But what I'm saying is, they can't shut it down. So that's number one. Number two component, that argument to the whole, like, they can close down in the places. They can do many things, right? They outlawed gold in United States back in the 70s, all the way up to, like, recent years, for private ownership, right? We've seen them ban public companies going public and stuff. We've seen them ban mergers and acquisitions. We're seeing them ban us from going outside at 10 o'clock at night for our own safety and protection, whatever. So we've seen them do these things. But guess what? Because we've seen them, nobody, the people are not stopping and thinking about, hey, once the ban goes out or whatever, I'm going to go outside. They're not stopping to say, well, they might ban me going public at some point in the future, so why even bother going out there and starting my own company? They're not saying, hey, they might ban me from, having, gold and stuff. You see the point, right? Like, things change, things evolve, but it is not stopping people from going out there and doing stuff. Now, in the contrast to Ray Dalio, if you don't believe me and you're like, who the heck are you, man? Nobody knows about you, right? That's fine. Paul Tudor Jones, he is a billionaire, another hedge fund manager, right? And he's basically saying, quote, a bet on Bitcoin is a bet on human ingenuity. And he's very much long Bitcoin, and I agree. There's so many intelligent people, ridiculously intelligent people, that are getting into this space, working with it, developing it, creating on ramps, off ramps, exchange ramps, ramps, that honestly, betting against it, it's like betting against the humanity, ingenuity, ability to adapt, ability to create, ability to develop. Way back when Jeff Bezos started Amazon, which was basically book sales online, people thought that he was crazy. Listen to his story. I don't care if you like him or not. I think there's a lot that we can learn from people when they're building stuff. People said that he was crazy. He had hard time getting people to give him money and seed money and start that stuff, because they said, who the hey is going to go online to buy freaking books? I mean, there's a bookstore, just drive to it. That's what people are doing, right? But people tend to sort of see what they see now and have hard time seeing what could be. It's only the crazy ones, as Steve Jobs said, that can see the future that nobody else can see and drive towards it. And those are the only ones that end up changing the world, right? So he's the one who saw that with the Apple computers and stuff, and has created this huge change and movement, right? Bezos, whether again you like him or not, he changed that whole industry. And of course, then it went from just books to just like about everything now, right? Like you can get your groceries delivered through them. You can get like dog food, cat food, toys for your kids, clothes, books, movies, news, live coverage. I mean, everything and anything you can possibly think of, Amazon can bring to you, and sometimes it's like the very next day, right? It costs you, the same amount that you would, but the time wise, it's almost instantaneous. It's absolutely insane. But again, it was one of those things that they just didn't see it at the time. We also have another billionaire, hedge fund investor Druckenmiller, says he owns bitcoins and a Bitcoin and in CBC interview and CNBC interview. My apologies. And he's the newest and the latest of the big billionaires coming in. So here is kind of some of the things. He said that Druckenmiller said on CNBC Monday he owns Bitcoin, becoming the latest high-profile, ultra-high net worth investor to get into this digital currency. He said he holds gold as well, and his gold position is many, many more times larger than his Bitcoin, but he also is predicting that his Bitcoin would outperform gold. Frankly, quote, this is direct quote from the article, so I'm going to assume that he actually said it. I have a hard time believing they would lie publicly. But then again, who knows? Anything is possible. Quote, frankly, if the gold bet works, the Bitcoin bet will probably work better because it's thinner, more illiquid, and has a lot more beta to it. Another quote, it has a lot attraction as a storage of value to both millennials and the new West Coast money. And as you know, they have a lot of it. And of course, not just millennials, but Gen Z. I don't know why people are forgetting about Gen Z. Maybe because they still see them as babies, but I assure you they are not. They are adults, not all of them, but many of them. And guess what? They're growing up. And guess what? They're growing up in the pandemic. They're growing up in the highly technical and technological and digital world. They are used to connecting with their friends the way that we're connecting right now. They're used to, spending and buying things using Venmo and Cash App and stuff. So, of course, they are starting to invest in Bitcoin because they see the value in it. When they hang out, they use VR, and that's where they go to the movies and concerts and all these different things. And for old farts like me, and I'm not even that old. I'm in my early 40s right now, if you can believe it. I can't believe it. It's crazy. I can't believe that I'm even saying it loud because I don't know that I believe. I mean, I know it's true, but I have a hard time believing that it's true, right? But like for me, some of these technological things are a struggle step. To them, it's normal. They grew up with it, right? And so of course they're using all of the digital stuff and consuming it. So not only is it millennials and the West Coast Silicon Valley kind of type of things and the hedge funds and stuff, but it's also Gen Z that as they become older, they're going to actually jump into it head first if they haven't already. Druckenmiller also said he's anticipating a 3 to 4 year decline in the dollar, and just weeks ago, a Bloomberg report revealed that Druckenmiller was betting against the dollar. So there you go. That's kind of what is going on within the whole Bitcoin yes, Bitcoin no, digital yes, digital no. Now, one of the additional pieces that I think we've covered here before, you've likely heard it, is that PayPal was starting to allow folks to go in and invest in Bitcoin, to buy Bitcoin, right? And, at first they started with the whole like waiting list and stuff. Now they actually opened it up to everybody. And they're saying all eligible PayPal account holders in the US can now buy, hold, and sell cryptocurrency directly with PayPal. Now, the downside to the PayPal piece, right? I think it's kind of cool because it gives an easy access to hundreds of millions of people, right? But what it also, the part of the challenge, and that's the sort of the good and the bad, is that you still can't do much of anything with it. So although eligible US users can buy, sell crypto assets, that's the entire scope. Like that's all you can do at the moment. Now, is it going to evolve? Maybe, possibly, I don't know. But right now, their terms and condition page says that you currently are not able to send it to anybody. You can't use it to pay for goods or services. You can't withdraw it from their crypto account to an external wallet. So basically, it's like you are very, very limited to what you can do. Now, some people really don't care, right? Because if you were a merchant, for example, using PayPal to sell your goods and services, and a lot of merchants that are online are using them, or at least have used them and stuff, but there's still a lot of them that use it. Many of them probably have held a substantial amount of funds inside PayPal and were using PayPal to pay for other services, right? So, like, say for example, that because I have a website, I have a content distributors, for example, right? And so I have a student as well. So the student comes in, they use a PayPal, that money goes into the PayPal account. Then from that PayPal account, I directly can go in and pay my contractors, whether it's like the designers or the marketing or the contributors or whatever, right? And so I don't even need a quote unquote bank account per se to be able to do that. So for some people, they just don't even care that they can't do much of anything right now. Now, PayPal has said that they're going to, develop the ability to sort of buy and pay with it and that kind of stuff. But right now, they don't have that. Will it develop it? They said they will, but only time will tell. And in final components right here, I do want to take a look at the chart of what's going on with Bitcoin and the Bitcoin price. As you can see, we do have a moving average of the 50-day moving average is definitely healthy and moving on up. The 200 is healthy as well. We do have a channel where it's been trading. It's moving a little bit too fast for my personal comfort level right now, because just November 20 November 2nd, sorry, not November 20th. I'm like, we're not even there yet, Nev. November 2nd, we were at like 13,300, and we've hit like 16, 16,400, 16,600, something like that. On November 12th. So in 10 days, we've moved up a little bit too fast for my personal comfort level. And so whenever we see it kind of go out of the whack, so to speak, it comes back down. So I do expect that it's going to come back down. And we've seen it before, and I think we're going to see it again. So I do expect that it's going to come down. As you can see, this is a 4-hour chart over here. I'm going to make this a bit. How the heck do you move this? Oh no. Well, this is not good. Come on. Oh, come on. All right. Clearly, I don't know how to use this darn thing because I can't move it. There we go. Thank you for playing along. So as you can see, we have basically what used to be a ceiling right here on November 12th at for the few hours is becoming almost like a floor right now, a support level. But we are right back in the channel, and so I do expect that we might see a bit of pullback, which we already have seen. As I've said, we were at 16,500, something like that. We've come down to 16,000. Sorry, I said 100. I meant 1,000. 16,200. Is it possible that we might revisit into the 15,000 level? Yes. Would I personally like that to go a little bit more sideways? Yes. I know that there's a lot of excitement and stuff, but my fear is that whenever we see a parabolic up, we see a very sharp decline, and so I think it's much healthier for the market to go, chugga slowly up, than just sort of explode. Now, the cool part is that it is going up, it is pumping. If we could see another sort of come back down, some confirmations at about 15,000, 15,500 kind of level, and then kind of continue to go up, do some more of that like accumulation period, it would make me feel much better about where we are and what's going on. So there you go. This is the news and the reports and the analysis and everything else for the day. I hope that you have learned something and have enjoyed it. Let me know how you feel about the whole thing of what we talked about, anywhere from that stay-at-home tax to Bitcoin, good or bad for you. whether you think that shutdowns are coming or not coming, and are they going to hurt us or not. Do you think stocks are going to continue going up, or are we going to see another 30, 40, 50, 80% dump down? Personally, I think it's going to go down, but then again, I really don't know. My crystal ball broke years ago, so the best that I can do is try to look at the history, performance, and everything else, and try to guesstimate of what might happen. Thank you for watching. If there's a subscribe button somewhere on the thing that you're watching or listening, I thank you, and find it, subscribe, hit some sort of notification if it exists, and I will see you tomorrow. And if I don't see you, well, you will hear from me for sure. Until then, stay forever money blessed, and do remember, you are only one deal away.